Well, good evening. My name is Carlos Millsap. This is my partner Brad Stewart, and we're here with Wealth Made Easy for You to help simplify the infinite banking process to try to help you to get a greater understanding, so that you'll be able to benefit by using this concept. How are you doing this evening, Brad?
Hey, doing great. Beautiful Wednesday. Glad to be aboard. And we just want to welcome everybody for joining us here, whether you're live with us, live streaming, or whether you're watching us on a recording. Welcome aboard.
Absolutely, absolutely. Yeah, Brad, I'm starting to realize that more and more people are starting to wanting to know more and more about infinite banking concept. And it's funny that you and I have both been in this profession for a number of years, and uh, we kind of didn't, we kind of looked at this. We really didn't pay too much attention to the infinite banking concept. But now that we're taking a closer look, it's pretty doggone interesting when you look at it, and I wish that I wished I would have taken advantage of it years ago.
Well, I think both of us. I think you said it pretty clearly. I mean, we're both pretty skeptical when we first heard about it, because kind of the too good to be true kind of thing,
Absolutely.
And once you stop, put that aside for a second, set your disbelief aside, and kind of jump in it and say, okay, lay it out here in front of me. Show me what it is about. All of a sudden, boy, it blows the top off of the situation and really opens up some doors that I was pleasantly surprised to have revealed to me. So very, very, very pleased.
Absolutely, absolutely. And I can't remember the exact video, but one of the videos that really hit home to me is that if a person is saving for a car, they want to pay cash for a car, they'll save up to a certain point. They'll get to that point, and let's say, for instance, they're going to buy a car every 5 years. Then when they get to that, they'll save. They get up to that ladder. They'll pull that money out. Now they have to start all over again. Then they go back up the stairs again, and now they'll pull that money out. Whereas with infinite banking, if you pull that money out, opposed to the bank account that you're putting that money into, the bank account, once you pull that money out, you're no longer getting interest on it. However, with infinite banking, if you pull that money out to purchase that car, you're still getting interest on that money as if it's still there. What a huge benefit.
That's a really unique. I can't begin to tell you how many times I've shared that really unique concept, that portion of the concept with somebody, and they've turned around and they looked at me like, "You selling snake oil? Is this one of those, witch doctor type?" I mean, nothing against witch doctors, but they look at me like, I just put another eye in the middle of my head or something, because
Exactly.
they don't. You don't know what you don't know.
You don't know what you don't know, and they don't. And what they don't know is that this is something that their banks use every day
Isn't that the truth?
with
Isn't
their
that
with
the
their
truth?
money, with their money. So that's the hilarious part of it. So so that's the funny part of it. So we got a question here, Brad. So can this infinite banking money, can that completely be tax free?
I really get a big kick out of that question coming in, because it fits perfectly with the intro that you just made, that we've just been talking about. Here we are talking about unique properties of this concept, things that you can do that you can't do with other financial vehicles that are out there. The tax-free aspect of this is a very strong contender for one of the strongest parts of the infinite banking concept. I think that something that you and I we always talk about, we always want to be able to stress when we talk to people, is that in answering this question, when you have a cash value whole life policy, it has to be first and foremost properly structured to be able to take advantage of all these little facets that we've talked about to come into play to work to your advantage. The money being tax-free is one of those. And most people, they don't even know this, but the death benefit of any, for most life insurance policies, the way they're structured, the money goes to your beneficiaries. Whoever you leave your death benefit to, it goes to them income tax-free. Most people don't know that. And over the years, the Internal Revenue Code has worked with the insurance companies to be able to do this. So Uncle Sam's not standing there with his hand out saying, okay, you just got this much money from a death benefit, 100,000, 50,000, $500,000, whatever the number might be, and say, now you owe me income tax on that.
Right.
If you follow the rules, you'll get every penny of that money without having to pay Uncle Sam a dime. Plain and simple. But take that a step further and look at it from the perspective of, in the infinite banking concept, you're in a position where you can take the money and use it income tax free, never be taxed on it except for the original premium that goes in, and you're golden. Now, I will say that the IRS has rules you have to follow. You don't want to go over those rules or over those limits. So because you want to maintain one of these most sacred cows, if you will, and that is having your money be tax-free. So you want to really be able to honor that and make sure that it's in place for you, because once you lose it, you never get it back in your life insurance. So, the technical terminology, and I don't want to bore you with this, but it's called a modified endowment contract if you go over this limit. And working with us, we will make sure that you stay well below that modified endowment contract level, what we call the MEC levels, to make sure that you're safe and protected. Because like I said, it's a wonderful aspect of this concept that works for you. Think of a Roth IRA on steroids to a degree.
Absolutely.
A Roth you can do, you put in money that's been taxed, just like you would do with your life insurance. You take out all the money, including all the growth, income tax free. But because it's a government idea, there are strings attached. The most important being you can only put in this much. You can only put in a tablespoon compared to a pitcher full that you could put into your 401k, for example. So with life insurance, you set the limits. You tell Absolutely. Us when you come along and we meet together, you tell us the kind of money that you want to look at putting into this. That allows us to be able to structure this and set it all up. Number one, so you'll be able to take and only pay tax on it that one time, and it's going to be there for the rest of the period of the life of the policy, i.e. till the day you die, and you'll be able to use it, maintain it, build it back up, borrow from it. You're golden. I mean, it's just a wonderful, wonderful aspect of what you can do, and it can be completely tax-free.
Absolutely. I always tell people there's a smart way and a dumb way to take your money out. The smart way is tax-free. The dumb way is paying taxes on it. So you can do the smart way, the dumb way, and with all of our clients, they use the smart way. So we'll make sure that happens to you.
You bet. Absolutely.
Yeah.
Absolutely.
So the next question we have here is, how can it be used to eliminate debt? Oh, that's a good one right there. That's a good one. And one of the things that we teach as people are putting money to this is that a lot of times when people are looking to pay off debt or pay off their mortgage faster or pay off their car note faster or looking to pay down their credit cards faster, they'll send in extra payments to the creditor. Now, we call that inefficient dollars. You're inefficiently using that money. So what we do is we help you to redirect that money into your whole life policy. As your money begins to accumulate, then what you start doing is you start pulling money out of the cash value of your policy, and you pay off the smallest debt first all the way up to the largest debt. Because what you're going to do is you're going to pay off that small debt first. Let's say it's a $5,000 credit card and you're paying $200 per month. So now you pay that $5,000 credit card off. Now that $200 per month that were paying on that credit card, now you put that into the policy as well. And you continue paying the policy. Now, once money accumulates again, you pay off the next bill and then the next bill until you get to the point where you're at your mortgage. And now you pay your mortgage off. If you do this properly, you can actually have your debts paid off in about 9 to 10 years, including your mortgage.
Including your mortgage.
Yep, including your mortgage. And that's how powerful this concept is if you do it right, because now you're taking those dollars that you were using inefficiently and sending it to the creditor who was just rubbing their hands because you were giving them all that interest money. They were loving it up. They were eating it alive. And now you actually can now take advantage of it because you're not only you're allowing that money to grow with interest, and even when you pull it out, that interest is still accumulating. Remember, we told you many times you have the ability to receive uninterrupted compound interest even when you pull those dollars out. Think about it. When you let that money go from your checking account to pay that credit card down on a monthly basis, or that car loan on a monthly basis, or the mortgage loan on a monthly basis, that money is gone forever. You never have an opportunity to accrue interest on that money. But you put inside your infinite banking policy, it's still there. It's still there. That's the best part of using leverage. It's said that with enough leverage, you can move the whole earth. So with enough leverage, you can pay off all your debt. And so we want to be the ones to help you eliminate debt.
And see, the other part of that, and again, this is a sideline to this, but a lot of people will relate to, is the fact that if you were able to eliminate all of your debt in up to 10 years, think about how much interest you have saved and you're not paying to that other financial institution, whether it be the bank, a GMAC, for example, a car loan company, a finance company, whoever, whatever. That's money that they're not going to see, because now you become your own bank by using your whole life policy and the cash values in it to be able to expand what you're doing and consequently get out of debt and stay out of debt.
Stay out. Yep. So get out and stay out. So, the thing is that we want to be able to let you know that with infinite banking, it has infinite possibilities for you, and getting out of debt is one of those things. So once again, I'm Carlos Millsap, and my email address is cemillsap@gmail.com, and that's Brad Stewart, and his email is bradstewart@yahoo.com, bradstewartusa@yahoo.com. Please go ahead and contact us today so that we can start answering any questions that you may have concerning infinite banking. If you're looking to get out of debt, we sure like to help you get out of debt. Feel free to take a look at our website as well, www.WealthMadeEasy4U.com. Once again, that's www.WealthMadeEasy4U.com. Okay. As you see on the scroll on the bottom, we're talking about guarantees, growth, safety, liquidity, and control. We want to be able to give you that. So we want you to come and lean on us and let us help you make the right decisions. Once again, I'm Carlos Millsap, and
Brad Stewart.
Look forward to have the opportunity to talk to you. And that's Brad Stewart. Go ahead, Brad. Say goodbye.
Hey, guys. It's been a pleasure being with you. Thanks for joining us. We always enjoy having you here with us, whether it's by recording or live stream. So We look forward to seeing you again on Thursday evening. And have a blessed evening.
Have a blessed evening. Talk to you soon.
Good night now.
Bye.